Pump promised, pump delivered. Everything that we predicted has happened, but beware and be prepared. In this live stream, which will also be a video, unedited, as I make them all live for members only, them watching it first, let me talk about these points here. The market is extremely risky right now. Below the 200 moving average, the pump on Friday, that's today, predicted. When did I predict this? 4 days ago, but beware. This was a members only live stream, as you can see, went out, and I said here, market to boom on Friday. I made that prediction. I was 100% confident of that. I told you about the inflation, the CPI, the CPI, the PPI. I made all those predictions and they were all spot on. The reason why I can be so accurate is not because I know more than anyone else, not at all. It's a simple fact is I know the same information that everybody else does. However, if they're a YouTuber, like Meet Kevin or others like that, they like to sell doom and gloom because it gets more views. I just tell you how it is. Also, I speak to the CEOs, the hedge fund managers on my X and my Instagram. If you want those links, you can get them. It will be below in the description and also pinned to the comments. So it's not that I know anything more than anyone else. In fact, I probably know less. I'm probably the least qualified person here, to be honest with you, but I learn most from you. I poll my audiences all day, every day. I go live 12 hours a day, and I've got a good idea what's going on. But beware, this is not all over yet. The markets are extremely risky. They fell below the 200 moving average, and the last time this happened, and Jerome Powell said a similar thing, the markets boomed. We might have hit bottom. I've said we were close to a bottom, if not a bottom. I don't see it going much more. I backed it up with my real money. Let me share with you exactly what I mean. If we go down to my S&P, I'm 100% in the S&P, 100%. If you scroll down, you can see my position, 99.9. 100% of my position is in VU. As you can see, I'm in 100%. I've been buying the dips. People often say buy the dips. They don't. They fear. They say it's going to go worse. Most people who say in retail investors, they say I buy the dip. They don't buy the dip. Very often they get capitulated with over leveraging. I am using margin. I am fully in with all my cash. I'm fully in with my margin. Look, you can see my entire portfolio. This is my real cash, my real money. I've got about $300,000 invested, 100% through my Roth IRA and my main account, all in the S&P. So I do what I say what I do it live, unedited, I make these videos live on a show, and you know exactly what's going on. So let me give you some theories of where we go from here and what to expect next. Because I think so far, I think you'll agree, I've been spot on. I've now made my 23rd trade and my 23rd win. You've seen me do it live on the show. Let me share with you my thoughts of where we go from here and what comes next. So let's talk about the markets where we are right now. Over the last few weeks, we've seen massive amounts of selling pressure, lots of capitulation. That means...
Robert Elliott donated $2 through a super chat.
Thank you so much for your support there. We've seen massive amounts of selling. Now, the reason for this is people have used the opportunity for instability and unknown certainty to drive the market down. The companies that we own within the S&P haven't underperformed. In fact, most have performed well on the earnings, but it's presented the markets the opportunity to sell off. There is plenty of potential theory that Donald Trump did this intentionally. We know his style to create noise and get everyone around the table, and that has been proven to work. A lot of noise, a lot of people now getting engaged around the table. So what we've seen is the markets go down. Potentially, this could be done on purpose to force the Fed to lower rates. However, Jerome Powell has said he's not going to lower rates on a reaction to the tariffs until he knows what the tariff effects actually are. And we won't know that for another month or two. So I don't see we're going to get a rate cut next Wednesday in March. I think we're going to get a rate cut in June, as I predicted and said. It's possible, but I don't think Jerome Powell wants to be a Paul Volcker and react to what Donald Trump has done. So what has happened? The markets have sold off. Many retail investors have been capitulated. They've been taken out of the market. Retail investors will often say buy the dip, but rarely they actually do, or they over leverage and they get wiped out from the market. It's called capitulation. When you've sold out and you've surrendered, you are done and dusted. Well, that may have happened. We may be at bottom. I made that prediction. So there is lots of evidence that this was all done on purpose to drive the markets down, to force the Fed to lower rates. The Fed are going to lower rates because of inflation is coming down. I said it was. Everyone knew it was. However, it was a good story to say it wasn't. A lot of people on YouTube are saying the end of the world's coming and so on and so forth. No, I'm not saying it hasn't been easy. It's been a very painful ride. It takes a lot of conviction and you take a lot of attack when you tell people the truth. People either want to be told they're going to get rich in 5 minutes or they want to be told the market's going to zero and you need to do this or whatever. I just rather tell you what's actually happening and show you on screen what I'm actually doing with my real money. I share absolutely everything. So let me warn everybody, I'm making this live with about 10 minutes to go before the Michigan report. The Michigan Consumer Sentiment Report is a political report. I don't even know why it exists. It serves no real purpose. All I'm interested in is, do the businesses I own make money? What's their margins? What's their profit? What's their future potential growth based upon macro conditions, but perhaps with future prices, commodity prices like Coca-Cola, building their stock up of sugar or whatever it might be. Understand the principles, the fundamentals, the valuations and so on. I don't really care what someone's political view is. And the Michigan report, which we had one a couple of weeks ago, which threw the market under the bus, is simply a political slap in the face, whoever is in power. Essentially, it's very Democrat at the moment, so they will say no matter what Trump does, it's rubbish. Now, I'm not pro-Trump or against Trump. I'm completely neutral. This show is completely impartial. This show just provides you the news, the information, with my information I gather from CEOs I talk to on X and Instagram and interviews live. If you want those links, look below in the description. It'll also be posted to the comments. I spend my time just finding out what's actually happening, what people are actually doing and what they're actually saying, as opposed to some ulterior benefit and gain. But the Michigan report that comes out today will attempt once again to throw the markets under the bus, or at least throw Donald Trump under the bus. They're going to say everything that's happening is rubbish. Now, it may well be rubbish. You may not like the policies. You may not agree with Donald Trump's stance and approach on the markets. But the evidence would suggest, looking at the facts, talking to the people that are actually making the moves, who's investing in America, who's selling out of America. Only a couple of days ago, we learned that that wine in Europe was being taxed 200% on tariff. So there are people investing in America, but there are also people taking their investments out. And we've seen a lot of international trades sell out of the main markets over the last couple of weeks. We've seen a lot of that. So this was done perhaps intentionally to give everyone the opportunity, not you. Remember, Wall Street doesn't exist to make you money. Donald Trump didn't crash the market, so if that's what you believe, so you can make money. What he's doing is what he believes is ultimately better for America. You might agree with that, you might not. I don't share my thoughts on that. To be quite honest, I see both sides of the argument all the time. I'm only really interested in the results. and what happens, and does it benefit the country? Does it benefit the world? Does it benefit people? That's all I care about, and that's what I report on. So what we've got is the markets selling off due to uncertainty. You need to understand uncertainty. Understanding uncertainty is understanding everything. Because if you are a retail investor, you are maybe new to the game, or you have a small account, and nothing wrong with that. I'm a retail investor, and we get emotionally involved. We decide to buy a stock because it's going up. We never decide to buy a stock when it's going down. You might say you buy the dip, but most people don't buy the dip. The evidence supports that. Most retail investors buy something when it's exciting, whereas the market knows that. I'm talking about Wall Street, governments, institutions. They know that, and they know how to manipulate that sentiment. So very often retail investors will say, why every time I buy a stock, it goes down? Well, the reason why you bought the stock is because of some outside influence which has encouraged you to buy, whereas it's very difficult to be buying when everybody else is selling, when things are looking bad. Why? Because you think it could probably be worse. Well, if you're worried about could it be worse, that's why you shouldn't be investing, because you don't understand what you're investing in. Because if you know that the forward PE of the S&P 500 dropped as low as 19.8, you will know historically that's a good level. Has it been lower? Yes. It's been as low as 6. And it's been way higher too. But we know the strength of the economy. We know PPI. We know CPI. It's constantly coming down. Inflation we're talking about. And you know the strength of the businesses. We've had Apple, Nvidia at some of their lowest ever forward PE ratios, but yet they're performing well. A lot of sentiment issues with new AI, new products coming out, and so on and so forth. But long term, you're not going to feel afraid to invest in Nvidia or Apple, for example, because you understand their businesses. And retail investors tend not to, and we know this because we did a poll and 85% of my audience said they'd never read a balance sheet. Well, how can you be buying the market? So when we have uncertainty in the markets, those that have the power to move the market, which is not you or us or anybody here watching this show, they look at the market and they can see the opportunity to drive it down through uncertainty. And what that really means is if you are a multi-billionaire, a multi-millionaire, or you're a large organization, you're an institution, you're BlackRock, you're Tesla, you're Wall Street, you're Warren Buffett, you're President of the United States, you know your actions and your trades can influence the market, and then the retail investors just simply finish the job and join in with you and drive it further down. But it was you that got it to move, not the retail investor. The retail investor might be able to move an individual stock. We've seen that with GameStop, and much smaller companies. We've done it on our show. People have all rallied behind a certain stock like Gorilla, and we've seen that happen. But to drive the overall market down, the S&P 500, that requires the institutions and Wall Street itself. And they do it because they know that there's bad sentiment now, and if we sell, everybody else will sell and everyone follows. It's why it just kept going down steadily over a period of weeks. People just kept more and more fearful and just kept selling and selling and selling. There was no immediate drop and done and then pump back up again. There was this constant fear. And you need to understand what sentiment is. Sentiment is if you are really wealthy and you're not trying to really grow your money, you are trying to protect your money. That's how I look at my money. I don't look at trying to grow it, even though I am growing it. I am looking how to protect my money. Now you might say, but you didn't sell anything. You could have sold at the top and bought back lower. Well, let me explain why I didn't, and let's talk about how that correlates to sentiment. If you've got money, real money, I don't have real money. I have $300,000. If you have real money, you don't want to or don't need to take risk on it. You can see the market's uncertain. I said the market would be uncertain at the beginning of the year, and you can decide to take your money and put it in Robinhood, for example, and earn 4%. Is it 4.25? With no stress, no drama. And if you've got $100,000, or if you've got $1 million, if you're earning 10% a year, just say, for example, it's 100 grand. Well, you'd earn $45,000 a year on $1 million by doing absolutely nothing. Well, if you're a multimillionaire, you couldn't live on that. So why would you take the risk? That's what sentiment's about. When the markets look unpredictable, real money comes out, parks it somewhere else, and all the retail investors are trying to grow their portfolio, sell out, and down we go. It could even be intentional. Now, let me explain why I didn't sell my position. Let me take you back into the studio. I hope you've enjoyed coming behind the scenes with me. Let me go back to the main studio and explain why I didn't sell, and did I really lose by not doing so? Here we go. So let me come back to you here, and let's talk about why I didn't sell. As we approach the Michigan report, which comes out in 3 minutes, it's already starting to trim once again. So let me explain why I didn't sell, and did I really lose? Well, if we look at it over the last month, you will see that I have gone down $22,000. And you will argue, if I'd sold at the top and bought at the bottom, I could have improved my position. And you are absolutely right. Of course you're absolutely right. However, that's not how it ever works. Never will, never has, never can. Because it's easy to look back now and say, okay, I was at the top, sell at the top, and that's the bottom, and we still don't know it is. Maybe it is, maybe it isn't. Michigan report is in a minute. We'll see what happens. So I never would have actually sold at the top. I never would have actually bought back at the bottom. What is certain is I would have been out of the market. And I would have then paid 20% tax on my gains. And if I'd managed to sell it at the top, I would have had a bill of around about $2,000, $3,000 to pay in tax for my gains this year. I'd rather not do that. That's money gone. I can't get it back. You might say, but at some point you've got to sell. Correct. But I can do it in a much more tax efficient way. I maybe want to borrow against my money. So I don't have to just sell to release capital. As we approach the Michigan report, as predicted, once again, you can see it going down. You can also see, and this is why I show on the screen, my actual time. You can see we've got 30 seconds to go before the Michigan report is out. I may even be able to bring you the Michigan report live. Let me just check in. I'm making this live stream. No, it's not there right now, but I'll bring it to you anyway. In fact, I don't even need to bring it to you because what they say is irrelevant. What is relevant is how the market reacts to it. And there's nothing they're going to say, I promise you, that's going to be complimentary to Donald Trump. There's no chance at all. It's a democratic statement. So, look at that. There you go. You saw that there, look, exactly on the stroke of 9 o'clock. Once again, live on the show, my predictions are right again. Now, will it stay down? Not necessarily. Not necessarily, because we are approaching the bottom and we are approaching the ends of tariffs. At least the tariffs will be taken away and negotiated. We will be fine in a couple of months' time. But did you see that immediate reaction? That immediate reaction happened live the moment it was announced. So going back to what I just said there, and this is so great that I'm doing all this live. This is why I do this live, so everyone knows this is the real deal, and you can see it. I mean, my real money. And anyway, if I'd sold, I wouldn't have sold at the top. How would I have known it was the top? Wouldn't have known. Would I have bought at the bottom? No. Anyone knows with any credibility, you'd have laddered in on the way down. I would have laddered in on the way down, so I never would have bought the bottom. Now, what if it had then suddenly gone up? Donald Trump had made an announcement. I would have missed the rally, and then I'd be now paying more to catch it on the way up. The long and short of it, at the end of the day, when all is said and done, when I need this money, this way of investing will always outperform in and out and so on. Now, if you can trade for free on your Roth IRA? Yes, but your main account, you should simply leave it and buy the dips. But as I said before, no one actually does. Very few retail investors actually do. They're always waiting for it to get worse. They're always waiting for the problem to get bigger, and they don't. And that is a simple reality of how it works. And right there, you saw live on the screen, the Michigan report. That is now being digested. Don't be surprised if we go red. And I'm so confident of the information that I'm giving you, I don't even need to tune in live now to get the reaction of the report. I don't, because I understand what I own. I understand the market. I understand the economy. I talk to CEOs and hedge fund managers every day. And if you want those links, X and Instagram. So I understand what I own. Now, just because I understand what I own, does that mean I'm always going to win? No. There are other things to consider. Yes, I've done 23 trades. Yes, I've done 23 wins. Yes, I've been buying the dips. No, I've not sold anything and I'm building my position. Yes, my predictions have been accurate and so on and so forth. But there are things that I cannot control. I cannot control what macro conditions are next going to occur. I don't know what Donald Trump is going to do next. I don't know if people dump America and start reinvesting or investing in Europe. They are doing that. Many people are doing that. Am I blindly buying America and investing in America because America can never lose? No, America can lose. We've seen the Ottoman Empire collapse, the British Empire collapse, the Roman Empire collapse, the Mayan Empire. Many empires have come and gone. Many currencies have come and gone. America isn't even an empire. It's a single country. Of course, America can fail. Trump himself will tell you that. The amount of debt that America has is overwhelming. They need to pay off their debts. So, of course, America can fail. Of course, American businesses can fail. Doesn't matter how powerful a business is, if the world decides to start buying a new brand of iPhone, a new brand of phone, not an iPhone, not an Apple product, Apple will fail. Now, those that work there, the directors of the company, Tim Cook won't lose his personal money. They'll sell the business. He'll still be a multi-billionaire. It doesn't matter. But to you, the shareholder who owns the business, you can lose your money. No question about it. So I'm not completely, nothing can go wrong. I'm getting it right all the time. And America is the greatest thing in the world. And I just keep buying America and I can't go wrong. I'm fully aware that things can go wrong. So my strategy will change over time. At the moment, I'm saying what I'm doing and I'm doing what I'm saying and I'm making these predictions and they're all proving correct. That's fine because I understand where we are now. But as my portfolio starts to go up again, which it will, I will focus once again on reducing my margin. I'm not just using margin forever and ever and knowing that America can never fail and we're 100% always going to win, because that simply isn't the case. Right now, the markets have been going down because of uncertainty. Donald Trump, a new administration, tariffs, so on and so forth, unpredictability, uncertainty. I've been using my margin. I've been going all in. I've been putting every penny I've got into the market and I've been buying every possible conceivable dip, increasing on the way down, never selling, staying in the market. As the markets start to go up, which they will, and we understand that, I will be reducing my margin. That is my way to protect myself from the future vulnerabilities of America. Because if we do get, and we could, there's no point saying nothing can ever go down, nothing can ever change. Of course it can. But I ultimately still believe in the businesses and I ultimately believe in America. I live here, I love America, and I'm proud to be here. But I can't just keep buying forever thinking nothing can ever collapse. So if I simply now, as I have and I am, stop investing on the way down because we've We've reached bottom. Potentially this was the bottom. Even the Michigan report now is bouncing back. Let me show you that. You saw the immediate reaction. It sold off as I said it would, but it's showing some strength. Maybe now we pick up from here. Maybe we've met the bottom. That was my prediction after all, and I think it's very likely. We went below 20 times earnings, and the sell-off was as strong. The RSI, the 200 moving average, what Jerome Powell said, the overall market, CPI, PPI, everything told us it was the bottom. So what I do now on the way up is simply focus on doing my job, earning my money. We all earn money. We all do what we do, and simply reduce my margin position. So over time, I'm simply paying off my margin, less and less and less and less of a risk. Then the overall market can sell and go down 50%, and I'm still okay. Now, should I sell and go, I'm done with America? Should I move to another country? Should I invest in Europe? Should I invest in China? No, there's no indication that that will be a long-term problem. Now, if it does, it does. We'll look at that in the future. But right now, America isn't just a flag or a government or Donald Trump. It's made up of 350 approximately million people, hardworking, majority decent people. The system is generally decent. The economy is generally decent. The businesses held within are the best businesses in the world, and that's not changing anytime soon. So I'm still investing, I'm staying in, but what I'm doing now is de-risking myself by simply not buying on the way up, because I bought on the way down. I'm simply paying down my margin. And that's my strategy. It's very, very simple. I'm not here to sell videos. I'm not here to create nonsense, noise and FUD. What I am here to do, as I've demonstrated with my real money, my hard-earned money, I'm live every day. We're members only all the time now, even though we'll get less subscribers and less viewers and earn less money. But it's about providing the best service for you. And what's best for you is ultimately what's best for me. I hope you enjoyed this live stream. I hope all of you that watch it later will comment and engage with me and leave me your thoughts below. Did you get capitulated? Did you sell everything out? Did you get margin called? Did you lose everything? Did you actually buy the dips? Are you following me on X and Instagram? If you are, message me and I'll reply back to you. If you are a member of my channel, I will comment to every single person. And yes, I do that to every single person. And don't say it's because you're only a small channel. We're ranked as high as Bloomberg and as Meet Kevin, ranking B on Social Blade, which is the way to measure your engagement of your channel. 98% of my live viewers are members, more than any other channel in the world. And I find the time to respond to all of my members. Join us, be part of the family, be an investor, don't be a gambler, just buy a business, own it, and let it go to work for you 24/7, 7 days a week. There we go. What comes next? Well, what comes next is we hold our positions, reduce our margins, and then over time, once my margin is paid off, I can reassess and decide perhaps to buy more if need be. But my only target was ever to get to $1 million live on the show. That is in the bag. I've just got to stay doing what I'm doing over the period of time, and that will happen. I hope you all join me for the journey. I hope you all make $1 million. I hope you all gain friends and support and enjoy the family and the engagement. We're constantly improving. Today, you may have noticed my audio sounds even better. I hope you like it. A lot of money and investment and time has gone into that. We're members only, giving you a much better service so you can talk to real investors. Don't waste your time messing around with people talking nonsense, just good investors. That's what this is all about. Let's do something great. Let's live a great life. Let's be happy and fulfilled. That's what this is all about. At the end of the day, this community is here. This show belongs to you. The reason why I rank B in the world, as high as the biggest channels in the world, even though we're just a small channel in comparison, but we're growing quickly, is because of you, not because of me. I'm just what brings it all together, but you are 99.9% of the viewing public. I'm just one. All right? Okay. I wish everyone the best. Here are the links above my head for everything I've mentioned in this show. My alpha spread, my Seeking Alpha, so you can get discounts, get the information ahead of time like I do. If you want to follow me on X and Instagram, it's also below in the description. It's also pinned in the comments. Follow my social links from this channel so you're following the real person, and I will engage with all of you. Over here, I'll put more videos I think you'll find useful, and down here, I'll put the FOMC report, which comes up on Wednesday. That is when we will hear much more. Will we get a rate cut? It's possible. I don't think we will, but it's possible. No one has said we're going to get a rate cut this time round. No one. I'm also saying I don't know, but it's possible. Until next time, as always, take care of yourselves and each other.